And while the Fed chair paved the way for a September rate cut, our next guest says the Fed is not the most important factor for small cap stocks right now. Joining me to discuss this is Julie Biel, the chief market strategist and portfolio manager at Kayne Anderson Rudnick. Julie, this is an interesting conversation because, as our previous guest, Chris Murphy, pointed out, there have been a lot of head fakes with regard to small cap outperformance. Why could this time be different?
Well, I think we're finally starting to see some improvement in the earnings of small cap, and that's really what's held them back. They were much more impacted by inflation, and so it really killed their profitability. They also have a lot of variable rate debt, so when interest rates came up, that really crushed them. Looking forward now, it feels like there is some relief for them in terms of improving margins and, being able to see the light at the end of the tunnel when it comes to interest rates if we do start to get some cuts. That said, the bond market's really way more important to, where the 10-year is trading, and that's more important to small caps. And also the thing that's tricky about that is the, presidential administration, they can bully the Fed. They have a much harder time bullying the bond market. It kind of goes the other way with that.
So the Fed and the bond market are certainly important factors. But as we've seen over the past 15 years, 20 years, given the great financial crisis, the Fed is still a formidable force in the markets right now. Are you saying that the bond market and bond investors can still fight the Fed?
Yeah, I do. I think that, we forget, but really the most important part of what the Fed is handling is the very front end of the curve, right? And if we think about what's happening in the mortgage market, for instance, that has really very little to do with the Fed. What's much more important is the fact that because rates were so low, people have stayed in their houses, and so you don't have this same turnover of prepayments of mortgages, and so most mortgage investors are kind of trapped in a lot of bonds that are, low rates with people staying in their houses. And so you just don't have the same level of demand for fixed income mortgage-backed securities. That's much more profound than what's happening with the Fed. And the proof of that is that if you look at what the 10-year did after Jay Powell's comments on Friday, it was not much, right? There wasn't actually that much movement. There actually hasn't been that much movement despite the rate cuts. And that's why I think that overall, the bond market is actually much more important right now than what the Fed's doing.
As you model out the performance of small caps, given interest rates, with a 10-year benchmark at just a hair over 4.25%, if that is a constructive level for small cap stocks, where exactly within small caps do you think the biggest opportunities are? What parts of the market?
So, the thing about small caps is it's for sure a place that you want to be active because you have 40% of the benchmark that is non-profitable. So for us, the place that we're kind of interested in is healthcare, which has just been a persistent underperformer across market caps, which makes sense to me, right? Insurance has been a real struggle. We don't know what's going on with drug pricing. For us in small cap healthcare, there's a company called Lemaitre that we really like. It's one that focuses on the vascular surgery. And in most of the cases, it's in this niche market where it gets to be the number one or number two player, and it doesn't have a lot of competition. Another company that's nice is Cooper. This is one that does contact lenses, and so it has a lot less competitive pressure. That's a very consolidated market, and it's a leader with its breadth and depth. And the last one I would highlight would be West, which does the injectables, and it is able to not have to deal with the struggles that we're seeing with the FDA, right? Because once it's approved, it works with the drug, and it's almost like an annuity. So we like those competitive positionings in healthcare, and these are companies that have a lot of durability to their earnings, and we think that that's, if you're going to be playing in small cap, which I think you should as part of any balanced diet, you want to be focusing on companies with high quality earnings.